Alejandro, thanks very much for joining us. Sustainable Development Capital, obviously focused on the sort of infrastructure side. But for those who don't know, Alejandro, just tell me a little bit more about the company and I suppose, the investment strategy.
Sustainable Development Capital is an independent investment manager, London-based, but we also have offices in New York, Hong Kong, Dublin, and Madrid. We have about 40 investment professionals, and we manage around just north of €1 billion of capital across private markets, but also we manage a publicly listed investment trust that was floated in the London Stock Exchange in 2018 and has been running for about just over 2 years, and now has an overall market cap of just over close to £800 million. And that's our flagship fund. It focuses exclusively in energy efficiency and distributed generation, which is a very particular but growing an important segment of the overall energy transition. And it was first of a kind at its time, and it's done fantastically well. We focused on the infrastructure end of the spectrum, so we are only investing in real assets that are cash yield producing, and typically they are contracted for a very long period of time. So in a way, the type of investments we make are very stable cash flows, relatively low risk profile, and usually contracted with an end customer that is willing to pay a fixed price for a service that is produced. In some cases, it can be heat. In some other cases, it can be on-site electricity. In some other cases, it's just paying upfront for implementing an energy efficiency program like lighting or refurbishing the HVAC system and things alike.
And looking, I suppose, at the kind of trends in that renewable new energy transition sector, Alejandro, what are you seeing? Are you seeing more of a focus on, I suppose, wave power, wind power, solar? Where do you see the focus at the moment?
The sector is in a very interesting inflection point. Historically, a lot of the focus or the investment, the capital has been flowing primarily into the power generation sector. And we invest in power generation primarily as on-site power generation for end consumers as opposed to grid-connected renewables. And that is obviously technologies like solar and so on. But over the next decade, the power generation sector is going to continue to decarbonise. And the rate of growth that we're going to see is going to accelerate almost double from what it has been for the last decade or so. So this is a very exciting time to be a part of that journey. And obviously there is traditionally well-established technologies like onshore wind and solar that will continue to play a key role in there. But also we see new technologies that are also maturing, like offshore wind playing a very, very important role. With the intermittency of solar and wind, we also need to make sure that we provide stable, reliable 24-hour power in your home. So whenever you try to switch on the lights, you can do so. And that means that also there will be complementarity with other technologies. And we see, for example, battery storage playing a very important role there, and hydrogen as an alternative fuel. But beyond power generation, the other two sectors that are also very exciting, and maybe 5-10 years ago, everybody was scratching their heads. How do we address those? How do we tackle those? Are heat and transport. And in heat, which is obviously primarily related to buildings, there's been a major step forward. And that means basically replacing gas with other sources of heating. And that can be like electrification, but it also could be electric heat pumps. It can also mean a replacement of natural gas, basically sourced from biogas or alternative fuels. And it also means potentially in the future replacing some of the natural gas with hydrogen. And that the economics of that are, today are not a reality, but it's something that the sector is obviously thinking very hard about. And then on transport, that is also going through a major transformational moment. Electric vehicles are clearly overtaking traditional gas-fueled vehicles, and certainly that's for light vehicles, but also for heavy duty vehicles like trucks, lorries, and so on, and also airplanes. There's the hydrogen as a replacement fuel is also something that looks very promising. So we see major change and major investments being made across all those three areas. So it's a very exciting time to be part of the sector. and as I mentioned, those are kind of like the key trends. So basically, a major transformational change in all those areas.
Given the sort of impact that this can have, are you having, I suppose, seeing more interest from impact funds generally looking at this infrastructure renewables sector?
We see demand and we see interest coming from pretty much everywhere, right? Investment managers like ourselves that manage third-party capital. We also see a lot of direct investment from big pension funds and insurance companies that have that direct investment capability, but sometimes they lack the sector expertise and they like partner up like with people like ourselves. We also see a huge amount of interest on corporates, and corporates are they have a dual role. One is they themselves can become investors in areas that have a good overlap with their, let's call it their core business. But also they can be very important in creating traction and demand for the services that are part of the energy transition. For example, providing corporate PPAs, power purchase agreements, to buy electricity from green or renewable energy sources, or alternative to decarbonize their supply chain, all the fuels they use to in the industrial processes. So corporates are also playing a very, very important role in the energy transition.
Really interesting to catch up. Certainly a growing area going forward, Alejandro. Thanks very much for joining us.
Thank you for having me.